Hello everybody, it's Nicholas here with another edition of Ask Ron. We've got Barbara and Lynette here, two of your mentors. Ron is actually on stage right now, so he wasn't able to do it, but we have very qualified mentors here to answer. So number one is from Marv Simpson from California. What are the requirements or any information that can be provided in regards to partnering with Ron on a deal? Does he have specific requirements for the deal, like ARV, down payment, cost, etc.?
Hi, Marv. Well, I'm going to answer that one for you. Ron has an excellent opportunity for you to partner, but in order to partner, you need to be in the mentoring program. So your mentor can explain all the details that you'll need for partnering. And the beauty of that is your mentor is going to go over the deal to make sure that you have a deal, and they're going to pre-screen and help you analyze all that to make sure that the down payment's correct and the deal's a deal and all that good stuff. And so Ron, good news is he just incorporated an opportunity so that if you need to get a rehab deal, he's going to partner up to 50% on that. So get with your mentor and they can give you more details on that.
And I'll just add a really quick thing to that, just like Barbara was saying. Ron LeGrand is the one who ultimately approves that deal when you're in the mentoring program. And then instead of a 50-50 split, if we bring in the money, because Ron LeGrand approved it, it's 75-25. Now, we can also do commercial deals, rehab deals. I mean, he'll fund anything.
Right.
It's amazing, as long as he approves it.
Right.
The numbers have to make sense. I'm telling you, Ron, he's going to need, like if you're doing a rehab, he's going to need the appraisal, he's going to need the contractor's bids, he's going to need everything. I mean, he's not going to approve or give money without all those things.
Right, and on a pretty house deal, he generally wants to have a minimum of $20,000 profit in the deal, and on a rehab, there generally wants to be about $50,000 profit in the deal, right?
Yeah, okay, good question.
All right. Let me add on to that. Why do you have to be in the mentoring program? Why wouldn't he just take as many deals as he can?
Well, he wants to make sure that you know what you're doing and that you have been to the basic training and you know what to do with the deal. So the mentoring program is there to help and guide you so that you know what to do when you're making the deal happen and you've got that partnership.
And that's a luxury that we decided to add as a bonus. It didn't used to be in the mentoring program because Ron has a pool of all these mentors to bring in, private lenders to bring in money. So not only can he bring in private lenders for you, but some people will actually do partnering deals because maybe they're uncomfortable with a $4,000 a month payment. Like it can be a more luxury home and they're afraid they won't be able to make that payment. So there's lots of reasons why you might want to partner a deal.
Right.
All right, and lastly, just because you're in the mentoring program doesn't mean you have to partner, right?
No, not at
No,
all.
as a matter of fact, most people don't.
Exactly, because that's what our mentors are here for, is to help and lead you and guide you through the deal. So mostly it's when you need money. Otherwise, your mentor's going to hold your hand through that process anyway.
Yeah, we're there for you 200%, no matter if you're partnering the deal or not.
Right.
All right, good question, Marv. All right, next question is from Phil from Loveland, Ohio.
Hi, Phil.
If I am leasing a property with an option to buy from a seller and then leasing it out with an option to buy to a tenant buyer, I assume I can deduct any repairs I performed on the house, correct?
Well, first of all, whether it's tax deductible or not, that's something you're going to want to refer to your CPA, and they'll tell you as far as your own situation what's going to be tax deductible or not. But is that all of the question? Is there any more question to that? Because I want to cover
There's more. So if I pay capital expenditures such as putting on a new roof, can I still deduct them since it isn't possible to have a capital expenditures on a property you don't own?
Okay, so therein is the root of the question there. You don't want to be putting money into a house that you don't own. So if you're just leasing it and then leasing it to your buyer, you're not going to be wanting to put a lot of money into it. You may have some minor repairs like painting, but very, very minor because it's still under lease. And therein too, you can go back to your seller and ask for certain small things like painting to be done, and you're never going to want to be putting a new roof on a property that you're just leasing and then leasing to your buyer. So you're not going to have those large capital expenditures to be worried about tax deductions.
And like Barbara said, it's a good point that you're not going to be putting money into a house if you're buying it on lease option. Now, your selling lease option is our favorite exit strategy.
Yes.
But the reason, when we met around like 16 years ago, he used to say, get the deed or get the door. Well, that's the way me and Brian usually get the deed or get the door, just like Ron LeGrand. We like to have more control of the property, so unless you have high transfer tax or there's a reason that you're trying to do a lease purchase when you're buying the house, such as high transfer tax, you have better control. The seller will normally give you not only a better price if you're actually buying the house versus,
Right.
you know, a lease to own, renting, maybe buying it. But they'll also usually give you a better term because they know they're selling the house. And then you can do whatever you want to the house because you do own it.
So the bottom line is that you want to try to get it on owner financing
Yes.
instead of lease purchase.
That's right.
And you want to make sure that you've got a good enough deal in there that if you are going to be making any repairs, that that's structured into your deal to make sure that you take that into consideration with the exit strategy and your bottom line.
All right. Next question is from Bill Morgan from Mississippi.
Oh, Bill. Hi, Bill.
Hey, Bill.
I'm a new Gold Club member, so much info, good stuff. I have an owner that has 2 rental houses for sale, and they are wrapped in one loan. They are worth about $125 together, and he will take payoff of $79,000 plus he wants $15,000 for his equity.
Okay.
So that's what, $94,000 total.
Okay.
His rent well covers his payment, 400 monthly, or with 400 monthly cash flow. Would owner financing be better or subject to? He wants to get cashed out as soon as possible, and he has good credit. He needs to show a payment coming to him so he can qualify for another loan.
Well, Bill, basically, you said that he needs to go buy another loan. So there's the answer to your
That's the
question.
key.
Exactly. So you could take a subject to, but if he needs to go get another loan, then you definitely want to buy on owner financing so that he has that document to show that the debt's washed out.
Well, it would
And
be,
so
right, it would be
he's
called a wrap.
Yeah.
Okay, and if he wraps it, he's much more likely to be able to find an opportunity where he would still be able to qualify. The debt ratio wouldn't be held against him. I mean, you'll still need to shop
Yes.
around, but
Yes.
definitely that makes it a possibility if you wrap it versus writing it up as a subject to deal.
Right, and wrap means owner financing. That means doing an owner financing and wrapping around the existing mortgage. So the answer is that you want to do owner financing.
All right, another good question. So next one is from Donny Miner in Warren, Ohio.
Hey.
Good afternoon, all. I have a possible deal that would need an out-of-state closing. Question is, how do I accomplish this? I live in Ohio, the home is in Ohio, and the current owner lives in Tennessee.
Okay, well that's easy. So what you want to do, because you live in Ohio and the home is in Ohio, you're going to have your Ohio attorney take care of it, and they'll just do an out-of-state closing, meaning that he will prepare the documents and send it to the owner in Tennessee to sign and get back to you, which is, it's done a lot. It's simple.
All the
Just
time.
use your same attorney in Ohio that you would use for other closings,
And
he'll
a
take
lot
care of it.
of the attorneys, they use DocuSign and they'll
Exactly.
FedEx whatever needs to be notarized, so
Exactly.
it's simple.
It is.
All right, and our final question comes from across the pond in London. Hi, Ron. I am operating from the UK, so I cannot meet with sellers to see houses. Who could you suggest to do this for me, to okay the house and possibly get the agreement signed? I have heard of field agents / acquisitionists. This is holding me back from getting started. Sounds
I
like a
can
Lynette
answer
question,
this.
right?
But do you already have an acquisitionist?
Well,
so if not,
It
go
sounds
ahead.
like he doesn't.
He doesn't. So
Well, we buy and sell houses in Minnesota, even though we live in Arizona.
Okay.
So you can actually get an acquisitionist who's going to be your boots on the ground. We have a whole system actually
Right.
that we did with Ron LeGrand on hiring and training an acquisitionist. So that's your key right there, is that you want to definitely hire an acquisitionist who's going to do the whole real estate. Basically, an acquisitionist is somebody who does the whole business for you. That's
Right.
why you're in London and you can be buying and selling houses wherever your acquisitionist lives. They're the boots on the ground. They're going to meet with the buyer. I mean, they're going to meet with the seller. They're going to meet with the buyer. They're going to do the whole real estate business for you. I mean, that's what enables me and Brian to be on the road teaching with Ron LeGrand and still doing 6 deals a month, is that we have 3 local acquisitionists in Arizona. So that's going to automate you to the point where you can buy and sell houses anywhere, and that's what's so beautiful about having an acquisitionist. So that would be your next step.
right.
Now, we are here at the Quick Start Real Estate School right now in Jacksonville, Florida, And we just had some phenomenal deals, didn't we?
Absolutely.
Yeah, lots of students brought leads in, and we actually did some deal structuring this morning. Ron LeGrand is teaching the whole 4 days at this one, which is unusual. Sometimes, you know, the nice thing about Ron, he's recording it, right? Isn't he recording it?
Yes.
But this is just so wonderful. We're right on the St. Johns River. It is so beautiful, and we are just loving it. We want you to come to the Quick Start. You can come to any Quick Start for free for the next 12 months, the whole 12 months from when you first purchase it. Come back because you learn more and more. And don't forget about the summit coming up. I'm sure you're already signed up. The summit in Nashville, yay!
If you're not, get signed up. You can't miss
That's right.
that.
So
That's
Nick,
phenomenal.
where should they go?
That would be res2019.com.
And we can't wait to see you there because we're going to be doing a ton of deals there. All the mentors are going to be there. All of them.
Yes.
Deal-a-thon. We're going to have a whole room. It's a whole deal-a-thon. And you get to go sit next to these mentors as they're closing deals for you at the summit in Nashville. So we really want to see you there.
So no matter where you're looking for deals, you definitely want to bring those lead sheets to the summit, even if it's from an area that's not your local area, because you want the mentors to negotiate those deals for you.
So this is Barbara and the Wolf couple. Brian and Lynette, well, not Brian, just the lone wolf.
Yes.
The lone wolf. The girls are together here, and we can't wait to see you guys at the summit.
Okay, bye guys.